Hello and welcome. You're watching ET Markets. I'm Tanya Aneja. Well, market seems to be on a recovery mode. Experts now believe that the Fed is likely to slow down rate hikes after one more large hike in September. However, US GDP contracted 0.9% in the second quarter, meeting bar of what some say is technical recession. So, how will the Indian markets perform going forward, and is the worst behind us? And also, what are the factors you should focus on at this point in time? To discuss this and much more, I'm going to be joined by a very special guest today. Mr. Kranthi Bathini of WealthMills Securities is joining us to share his market outlook and sectors looking attractive at this point in time. Thank you so much, Mr. Bathini, for joining us on ET Markets.
Thank you, Tanya. Always a pleasure to share my views on ET Markets.
Markets have rallied from the low. I mean, we are at 17,000 now. Inflation appears to be peaking, but US GDP data shows second straight contraction in the US economy. So, what is your view on Indian markets for the short to medium term? I mean, is the worst behind us or is there more pain ahead?
Tanya, if you see how the market runs, normally we perceive stock markets and the economy run hand in hand. Sometimes stock markets go ahead of the economy. Right now, what we can see is, as we say, stock markets are always forward-looking animals. Markets are trying to see what's going to happen in the next couple of quarters. Sometimes market tend to discount the events next 6 months also. Right now, if you see the scenario, one hand, the Fed is tightening the liquidity into the economy, and they have taken a gigantic steps, we can say, because after 20 years, Fed at a single stage, they have been increasing the interest rates at a 75 basis points. We tend to say 75 basis points, but it creates a lot of difference in the global liquidity is concerned. But currently, if you see India, domestically, the events are happening are in favor of the markets. The economy is much more insulated with the global events that are taking place. If you see the tax collection numbers, the GDP data and GST data, these are all in favor of the Indian economy. Whereas coming to the inflation worries that have been more of a external centric, but given the domestic events, one thing what we need to see is last 1 month we have a very good monsoon, and also we have witnessed a decent earnings season. So these are the factors that are creating a positive vibes in Indian economy. Coming to the global factors, more of the GDP data that's coming, and the Fed announcements that are coming, they have some kind of influence on the fund flows into the Indian economy, Indian stock markets. So overall, what we can see at this moment is Indian markets are much more insulated right now. But the good thing that's happening right now is the worst is behind us. The foreign portfolio, which are net sellers from past 5-6 months, they have reduced the quantum of selling. So that is helping the Indian market to sustain and come back above 70,000 levels right now.
Okay, and also, what do you make out of corporate earnings announced so far? I mean, what are your thoughts on earnings downgrade and expectations for FY23?
If we see the earnings season, we are right now in the middle of the earnings season. What would be the companies that declared the earnings till now? They have been shown a decent earnings. It can be sector specific, it can be stock specific. Overall, the large cap and mid caps, these are the decent earnings. We have seen earnings expansion in some kind of pockets. Overall, it's a decent earnings season. Coming to the FMCG, there is a decent earnings upgradation what we are witnessing, and the influence of inflation on the company earnings is very minimal. So Q1 quarter numbers are decent earnings for the markets, and if the same trend going to continue in next couple of quarters, so for the year financial year FY23, we are going to have a decent earning growth, and we are going to see a mid-teen earnings growth, and that gives a lot of headroom for the market, and that increases the margin of safety for Indian markets. But overall, the influence of the foreign portfolio investors, whether they are going to be net buyers in the next coming quarters or they continue to be sellers in Indian markets, this is the game-changing factor for Indian stock markets are concerned. So overall, going ahead, there is a greater influence of external factors that are going to influence the Indian markets than the domestic events that are going to take place.
Okay, and since you talked about FMCG, I mean, we saw FMCG sector taking major part in the recent market run. So what is your take on this particular space?
The FMCG, the large cap FMCG, we can name a stock like HUL.
Yeah.
Despite of the pressure on their margins, the Indian consumers, what we can see is the spending has been going up, the revenues has been going up. So, this shows a different India and the change in the consumer behavior in India. So that same trend is going to continue as India's disposable incomes go up. The same trend we can see in FMCG and some other sector. One of the interesting sector, and if we analyze in detail, the last quarter, the earnings of some companies who are into the sectors like furniture and also the companies who are into real estate and renovations, these are the companies that are posting very good amount of growth in terms of their revenues, and margins have been going up. So what we can see is consumers are more towards spending more. There is a greater emphasis given to Indian economy in terms of the consumer spending is concerned. That's where the main difference is coming in Indian markets.
Okay, and what about some of the new age tech plays? I mean, what would be your advice for the people? I mean, what should they do at this point in time with the likes of Policy Bazaar, Zomato, Paytm, Cartrade? I mean, what is the biggest concern right now, and is it a good idea to buy the dip?
Exactly 1 year back, these are the, I can say, flamboyant and the more flavored stocks exactly 1 year back. After 1 year, these are the stocks became a nightmare to the many of the investors. Investors lost nearly 50 to 60% in these kind of stocks. Tanya, one investor need to keep in their mind, the highly popular and highly priced stocks never created wealth to the investors. It can be in the secondary market or it can be in the primary market. Over a period of time, these kind of excessive bubbles can fizzle out because always company stock prices are always slave to the earnings of the company. Till the time these companies cannot become the net profit oriented companies, cannot turn as a positive cash flows, these companies are continue to remain sluggish in their sluggish in their performance in stock markets. So one need to be very cautious. Of course, these are disruption. These business models created a lot of disruption in their way they function, in their sectors they operate, in the segment they operate. But investors need to keep in mind what price we are paying for these business models. That is extremely crucial for an investor to take any investment decision. Given the kind of current prices are concerned, investors who have a very high risk appetite, they can experiment stocks like Zomato and other business names what you named in our conversation. Only these business models are suitable for a very extremely high risk takers, not for a retail investor.
Okay, all right. And I also want to talk about the IT space. I mean, the momentum and the sentiment around this sector is weak. So do you think that this is the right time to take a position there, or it's better to wait for some more time?
The overseas environment, as the US GDP numbers are sluggish and also the recession worries around the US, that are creating extra pressure on Indian IT stocks are concerned.
Right.
It can be large cap, it can be mid cap. But overall, if I have to envisage the scenario of past 20 years, how the large cap IT stocks are behaved despite of the slowdown in the US economy and also the recession worries and also great financial crisis that created in 2008. But IT stocks, especially the large cap IT stocks, proven that they are resilient in terms of their business models. So investors with a long-term horizon, definitely if there is a dip that comes in the large cap IT space, it can be stocks like Infosys, TCS, or stocks like Tech Mahindra. These are the stocks investors then they can keep on their radar and try to accumulate these stocks over a period of time if the valuations correct from these levels.
Okay. And lastly, Mr. Bathini, where are you seeing pockets of opportunities at this point in time? I mean, which sectors are looking attractive, especially after the recent correction? The sectors that you are betting on?
Especially, Tanya, if you see the participation of leadership in the market, the banking and financial services stocks are not participated in the current rally. The large cap corporate centric private sector banks can be investors they can bet, and stocks like HDFC, which is still a laggard in the current market rally. Investors with a long-term investment horizon, definitely they can consider stocks like HDFC at this point. They can cherry pick these stocks and invest in a staggered manner. And the other sector, it's not the much discussed sector. Stocks in defense sector, there are some specific specific stocks are there because there are a lot of things are happening in defense sector post independence. So this is the space investors keep in on their radar. There are different pockets of stocks with decent valuations which have a greater earnings visibility. Definitely investors can consider stocks in this space which are going to benefit with the defense spending, and also the great Atmanirbhar Bharat and Make in India. There are many companies that are going to participate in the defense story is concerned.
Okay, all right. That's the advice coming in. Thank you so much on that note, Mr. Bathini, for joining us here on ET Markets. Thank you so much.